Despite government's claims that all prior conditions of the IMF have been met except foreign exchange reserves, the central bank is expected to raise the interest rate by up to 200 basis points in its next monetary policy meeting. The clear indication was given in the latest Treasury bills auction held on March 22, when the yields on the short-term government certificates rose to almost 22%. In the first week of March, the State Bank of Pakistan increased the interest rate by 300 points to 20%. Days before that massive hike in the interest rate, the government had already increased the Treasury bill rates to around 20%. The SBP's next monetary policy meeting is scheduled for April 4. Meanwhile, the country's overall foreign exchange reserves increased 2.3% to $10.4 billion during the week ending on March 17. The figure crossed the 10 billion mark for the first time since January 13. The State Bank of Pakistan's holdings increased by $280 million to $4.6 billion during the week after it had received a $500 million commercial loan from China. A long-awaited loan agreement between Pakistan and the IMF will be signed once a few remaining points, including a proposed fuel pricing scheme, are settled, an IMF official confirmed on Friday. The coalition government and the IMF have been negotiating since early February on an agreement that would release $1.1 billion to the cash-strapped country of 220 million people. The latest issue is a plan announced by Prime Minister Shehbaz Sharif last week to charge affluent customers more for fuel, with the money raised used to subsidize prices for the poor, who have been hit hard by inflation, which in February was at its highest in 50 years. Petroleum Minister Musaddiq Malik told Reuters on Thursday that his ministry had been given 6 weeks to work out the pricing plan. On the other hand, IMF's resident representative in Pakistan, Esther Perez Ruiz, said the government did not consult the fund about the fuel pricing scheme. Ruiz confirmed a media report that a staff-level agreement would be signed once a few remaining points, including the fuel scheme, were settled. She added that the fund would ask the government for more details about the fuel proposal, including how it would be implemented and what protection would be put in place to prevent abuse. The representative index of the stock market traded on the lower side in the outgoing week, mainly because of an uncertainty over the resumption of IMF program. The benchmark index of the stock market closed at 39,942 points after shedding 1,388 points or 3.36% on a week-on-week basis. Arif Habib Limited said the government announced a subsidy scheme for petrol users without consulting the IMF, which could potentially cause further delays in unlocking the next IMF loan tranche. On the other hand, the rupee depreciated against the dollar by 0.53% on a week-on-week basis to 83.2 rupees. Short-term inflation based on sensitive price index rose to an unprecedented 46.65% year-on-year basis for the combined income group for the period ending March 22, according to the data released by the Pakistan Bureau of Statistics on Friday. However, on a week-on-week basis, the weekly inflation rose sharply by 1.8%, with food items getting costlier, particularly fruits, tomatoes, potatoes, and cooking oil. The SPI is expected to intensify further as the worst impact of inflation in the wake of Ramadan-related demand spiral, rupee devaluation, costly petroleum products, hike in general sales tax, and higher electricity and gas tariffs is yet to be reflected in official data. The commodity prices are expected to show a rapid increase with rising demand in the coming week. Earlier, the year-on-year SPI surged to 45.5% during the week ending September 1, 2022, and it stayed above 40% for the first time since August 18 last year, when the reading was 42.31%. IMF chief Kristalina Georgieva warned on Sunday that the risk to financial stability had increased and stressed the need for vigilance following the recent turmoil in the banking sector. Speaking at a forum in Beijing, the IMF managing director said she expected 2023 to be another challenging year, with global growth slowing to below 3% due to war in Ukraine, monetary tightening, and scarring from the pandemic. Uncertainties are exceptionally high, with the outlook for the global economy likely to remain weak over the medium term, she told the China Development Forum. Her comments came after the financial sector was shaken by the collapse of Silicon Valley Bank, an enforced takeover of Swiss bank Credit Suisse by rival UBS, leading to fears of contagion.